What is a credit market? A credit market is often identified as the marketplace for governments, businesses, and entrepreneurs who are seeking to raise funds through some type of debt assurance strategy. This would include the issuance of investment-grade bonds as well as other securities like commercial papers and junk bonds. Offerings like collateralized debt obligations or mortgage pools are also usually considered examples of securities that are found in a credit market. In reality, a credit market is actually a collective name for a number of different types of investment markets. One example of a credit market is the bond market. This particular marketplace includes bonds that are issued by businesses, municipalities, and even federal governments. Considered a relatively safe investment, these types of credit investments provide a smaller but reliable rate of return without the need to assume much in the way of risk. The popularity of bonds as an investment option helps to bolster the attractiveness of the credit market in general, making it one of the largest investment marketing segments in the world. Along with bonds, mortgage pools are another popular option. While there are some variations on how these pools are structured, the basic idea is to make use of mortgages as the underlying securities for an investment option. Investors earn a return based on the amount of interest that is generated by the underlying securities. While carrying greater risk than most bond issues, mortgage pools tend to be a good option as long as the economy remains stable. Mutual funds are also considered an offering on a credit market. Funds of this type may be structured to appeal mainly to corporate investors or be aimed at individual investors who gradually increase their interest in the fund, sometimes through an employer-sponsored mutual fund program. The actual framework for the fund will vary based on governmental regulations that apply and the type of investors that the fund is attempting to attract. The actual size of a credit market will vary from one nation to another. Nations like the United States and the United Kingdom have traditionally enjoyed markets where there is a wide range of investment options available to investors of all sizes and types. This is usually seen as a healthy situation since it encourages investment activity and helps to keep the general economy healthy. Smaller nations may or may not offer the same range of investment opportunities. It is not unusual for a nation that is emerging from financial difficulties to actively but systematically pursue broadening the credit market as a means of stabilizing its economy and incrementally improving the standard of living for its citizens.